You could put it on the board. Yes, we're trying to put it on the board. Oh, we got one filled. We did get one filled. I've got 10 contracts I'm trying to fill on a call credit spread on the SPY. So SPY looks like it's trying to go up right now as we speak. It's a battle though, isn't it? It's a battle. You see it had a big downturn right through here. I had a trade I was about to put in place right here. It would have been filled and would have been real nice. But then I started working on this silly spreadsheet over here that I want to share with you. Got my SPY trades all lined up to review. But let's see where we're at, if we're getting any closer to filling. I would imagine not any more than one filled now. So where we're at right now is I have a 402 and a 403. So selling the 402, buying the 403, and it's $1 wide, which means it's $100 collateral per contract, trying to fill 10 contracts and make $50 on the credit. But right now, only one of them have been filled. So what would that be? $5. So there's $5. But if you look at these two numbers, $1,000 collateral, $50 estimated credit. So that'd be a 5% return on my money for a same day expiration. So in one day, 5%. That would be pretty nice. But when you look at where the risk is, and this is what I want to show you on the spreadsheet, what the potential downside is, that's why you have potential for 5% returns in one day, because you have potential for hundreds of percent loss in the same type of trade. So what are we looking at right now for the SPY? Oh, wait, I should get these filled. 399.18. Why aren't they filling? Why? Tell me why. Let's do this and see if it updates if we go back. If we go back here and see how many of those are pending, it's still just showing one that has been filled. One that's filled, and we're currently up $1 bill, 20% on that one contract that was filled. But let's go back to the spreadsheet, take a look at what's going on here. So these are the trades you've seen me make. I've made them all. I've recorded every single one of them. They are on the channel, The Wealth Snowball, here on the YouTube, and it was a 30 trade experiment. So I'm just over the halfway point on the experiment, and let's take a look at what's happened. All right, so we had several in a row that were all just profit, right? We were in the profit. So we had 1, 2, 3, 4, 5, 6, 7 call spreads in a row between February 27th and March 2nd. All right, so we did a bunch of call spreads in a row, and then on this date, 3/2, March 2nd, that would have been a week ago. So a week from today, which is Thursday. What is it, Bart? It's Thursday, March 9th, 11:29 a.m. Central Standard Time on the Swatch Watch. And on that day, we put both sides together, and our call side got us in trouble. So these two red trades are the ones that you see I aborted down here. Abort, abort, red rum, red rum. And then you see we got out of this one pretty good. This was this trade here. So we were credited 20, and then we had to pay 39 to get out of it. So our net loss on that particular trade was $19. This one, however, no bueno. We took it right on the chin at $465 debit to get out of this trade. So we collected $110, but then we had to pay $465 bills to get out of it. So that was no good. And so what I learned with these trades right here was stick to the 0 days to expiration unless it's a 4-day, so same week trade. So what caught me on this one was that weekend. So that theta worked against me because the trade was working against me while I was snoozing away on the weekend. So on Monday morning, so on 3/6, that would have been Monday morning, that trade was expiring the next day at 3/7, and it was already going against me pretty good. So I got out of it at this big time loss. So That's the risk. Because if you look at these credits, my biggest credit was $140, and then that big, huge loss of $465 hurts. It's like a gut punch. It knocked the wind right out of me. But if you look at all the trades right now and you add them up, you know, add up all the profits, subtract all the losses, we're still in the green. We're at $401 to the green side, and that is $401 that I didn't have previous to starting the SPY trade experiment. And then if you looked at percentages, you'll see these returns. That's the attractiveness of them. But then you go bang, bang, and you take it on the chin, two big losses in a row there. That's where we stand on the number of trades that we've made. And what is it? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So and now we just put the 17th on the board. So we are over halfway to the experiment, 30 trades on the SPY. Let's take a look back here and see what it's doing. Okay, I would imagine that those would be filled because SPY is trying to fight its way back up today. So it is back in the green. It's up 29 cents, 0.07% to the green side after taking it on the chin right through here. So we'll keep an eye on that, but let's take a look back and see if we did fill any more of those. So let's it's supposed to update in real time, but let's just check it because I got this farm field internet out here. Let's see if any more of those 10 have filled. It's still showing one out of 10. Come on, I want them all filled. I feel pretty good at 402. Famous last words, right, Bart? Yeah, you never know. I mean, if it keeps rolling up here, maybe it was meant to be that those were not filled. And as that time decays, then I have less and less chance of getting the type of credit that we tried to lock in on that trade. So there we have it. Just checking in here live with today's SPY trade on Thursday, March 9th, 11:33 a.m. I'll be back. I want to make some adjustments on some trades that are already on the board. I'm going to push those out. I'm a little nervous about tomorrow's market because the jobs report will come out in the morning. And the market has showed some definite emotional volatility on the report. The market wants to it's just fighting to go up, but all the news has been trying to keep it anchored down to the ground. So if the report comes in hot tomorrow, then the market could have a nice, or I should say a bad sell-off, maybe even 2 to up to 3% down if it's really bad like the previous jobs report, which is, it's one of those good news is bad news situations because Jay Powell and the Fed is trying to tamp down the entire marketplace, which includes the jobs market, because the higher the wages, the more job opportunities, the less the unemployment, the more money that can be spent chasing $10 a package bacon. So just bought some bacon today over at the Meijer. It's an arm and a leg. Oh, all of these things cost so much, but I was so excited because I bought a 12-pack of A&W root beer for my son, kid 3, and it was like, I don't know, $6.70, and then I had a coupon for 50% off. I'm like, that can't be true. Is it really going to be 50%? And sure enough, it clicked through, and I was like, man, that's 3 more dollar bills right into my pocket. Well, I should say not coming out of my pocket. There we have it. That is my update and my rambling. I will check back soon, make some adjustments and some trades, look at a couple opportunities for the Wheel of Fortune trade, and make sure you are subscribed, like the video, leave a comment, and I will see you in the next video.